Welcome to the Fear and Greed Afternoon Market Report for Wednesday, the 30th of June 2021. Where in just a few minutes I tell you everything you need to know about what's happened in financial markets and the world of economics today. I'm Sean Aylmer. The last day of the financial year was a good one for investors. The S&P ASX 200 rose 0.2% to finish the fiscal year at 7,313 points. All in all, it was a pretty quiet final few sessions for the bourse, in very sharp contrast to the incredible run over the past year. The ASX 200 is up 24% for the year. That's the best since the bourse's inception about 30 years ago. Sure, it started at a low point. The 2020 financial year was among the worst due to the COVID pandemic. But still, what a year. A surprising pace of recovery in the economy sent shares surging. Among the best performers for the 12 months were the discretionary stocks, such as many of the retailers, the banks, and the technology stocks. The utility index was far and away the worst performer of the year, down 23%. Today, Rio Tinto and BHP were both among the best performers, up 1.1% and 1.3% respectively. Fisher & Paykel Healthcare dropped 2.2%. Buy Now Pay Later Group Afterpay finished 1.9% lower, and Gold Digger Newcrest Mining and Blood Plasma Group CSL were both off 1.6%. Travel stocks did well today. Webjet climbed 3.6%, Corporate Travel Management was up more than 3%, and Qantas finished 2.4% higher. Iluka Resources was easily the best performer, up nearly 12%. Telstra jumped 4.4% on news it has sold a 49% interest in Telstra Infraco Towers to a consortium including the Future Fund, Commonwealth Superannuation Corporation and Sun Super. The price was $2.8 billion, and 50% of that will be returned to Telstra shareholders when the deal is complete. There were some very big falls today as well. Newey hit an all-time low and finished down 14% after the corporate watchdog accused the group's former CFO of making $17.8 million from insider trading after helping release a prospectus for the tech company's December IPO that was false and misleading. AGL Energy's board has approved the split of the company later in the year. The new group, Accel Energy, will house baseload power producing assets, i.e. coal-fired power stations, and the redevelopment of its sites to low-carbon industrial energy hubs. Accel will retain a 15 to 20% stake in AGL Australia, which will house the retail assets. AGL's share price dived 10% today. Kogan.com.au also fell sharply, down 9.5% after a number of strong sessions, and Collins Foods, which reported slower sales in its KFC and Taco Bell outlets in recent months, dropped 4.3%. The Aussie dollar is trading at 75.2 US cents. That's a little bit lower. And just recapping Wall Street, strong housing sales and consumer confidence figures overnight did little to boost the market. The S&P 500 and Dow Jones Industrial Average both closed flat, while the Nasdaq ended up 0.2%. That's it for the afternoon market report for Wednesday, the 30th of June 2021. Join me tomorrow morning for the Thursday edition of the Fear and Greed Business Headlines. I'm Sean Aylmer. Enjoy your evening.